Hey everybody, how is it going today? In this video, I want to do my M1 Finance account portfolio review for the month of June 2021. Now, if this is your first time watching this series, the objective of this portfolio is to reach an account value of over $100,000 and $500 a month in dividends by the end of the year 2025. The rules for this account goes as follows. I make two $100 weekly contributions with an extra contribution on days where the S&P 500 closes down more than 2%. Now, usually that contribution is also $100, but sometimes I send more depending on the market conditions. The reason why I make that extra contribution is because studies show that can increase your portfolio's return by double digits over the long run without adding much more money. Now, I will link an article in the description on that if you would like to learn more. All right, so let's do my M1 account portfolio review for the month of June 2021. I'm actually recording this on the 4th of July, so happy Independence Day to all of you out there. If you're not familiar with M1 Finance, I personally think it's a fantastic way to build your wealth. It's run similarly to like a 401k plan you might have at a job where they're taking weekly or bi-weekly contributions out of your paycheck and you're just dollar cost averaging into the market. But with M1 Finance, you get to pick how many times you want to make contributions, whether it's weekly, bi-weekly, daily, or monthly. You can do whatever you want in any increment that you want, and you pick your own stocks, and you are dollar cost averaging, which I think is a phenomenal way to build your wealth. I actually have an article in the description that describes why it is so powerful if you do want to learn a little bit more about it if you're unfamiliar. And also there is a referral link for M1 Finance also in the description if you want to start an account. If you use that link, you and I will both get the bonus of, I believe it's $30 this month. So it'll get you started with an initial $30 contribution. But let's get into my account. Last month, my account was worth $23,996. And as we can see, it has grown to $25,747. And my money weighted return for last month was 103%, and right now it's at 111%. So we had a nice little gain for the month of June. And actually, let's scroll down and take a look at all of my investments so far. My biggest position is Tesla, and Tesla is up 805%. And by the way, I started this account in November of 2019, so it's right around 18 or 19 months old, so I haven't had this account for too long. And of course, I started investing just a few months before the big pandemic sell-off. So if you're worried about getting into a market top, or getting into the market near a market top, I got in at just a couple months before we had the huge COVID sell-off. So you can see, as long as you are dollar cost averaging, eventually the market will go up again. They're not always going to be a sharp rebound like we had after the COVID sell-off, but eventually the market always does end up going higher. So as long as you're dollar cost averaging, there's really nothing to worry about. As long as you are buying good companies and you are contributing on a regular basis, if the market goes down, you will continue to buy at those lower prices. So it'll bring your average cost down. And then when the market eventually turns up, you should be in good shape. But let's get back to my account. My biggest position is Tesla, which is up 805% since last November. My second biggest position, actually, these are going by largest gain. That's how this one got filtered. But my second largest gainer by percentage basis is Snapchat, up 647%. Then goes Square up to 408%. CRISPR Therapeutics is up 283%. Grow Generation is up 243%. I have the ARK-K Fund, which is up 146%. Uber Technologies, which is up 145%. Goldman Sachs, up 138%. Simon Property Group, which is a real estate investment trust, which is up 130%. Skyworks Solutions, which is up 115%. If you're not familiar with Skyworks Solutions, they are a pretty decent company. They make semiconductor products, they make microchips, and they're supposed to have some pretty decent growth in the 5G boom. Skyworks Solutions pays about a little over a 1% dividend at the moment. When I was buying into them, it was closer to 2%, but still, I really like having Skyworks Solutions in my portfolio, and they're actually not a bad value right now. I think their price to earnings ratio is under 20 right now, and they also announced a big share buyback for this year. They're buying back about 7.5% of their shares outstanding. So the pie will continue to get smaller, but my percentage of that pie will continue to go up, not only by the shares that I continue to buy in this account, but because the pie is shrinking. So that is always a really nice thing when you have a company doing a big share buyback. But my next biggest gainer is Apple, up 102%. Then we have Illumina up about 100% even. We have Baidu up 97%, followed by Microsoft up 90%, JP Morgan Chase up 89%, Disney up 70%, Waste Management up 56%, Carnival Cruise Line, that was my turnaround play from the pandemic sell-off, they are up 55%. 3M, which pays a pretty decent dividend, is up 47%. Health Peak Properties, which is another real estate investment trust, is up 38%. The Vanguard High Dividend Yield ETF is up 32%. O Realty Corporation, which is a monthly paying real estate investment trust, is up 24%. Palantir Technologies, which has been a new add to the portfolio. It's only been in the portfolio for a few weeks or so. It's up 11%. LTC Properties, which is another monthly paying real estate investment trust, is only up 4%, but that's all right. We have Verizon that is up 2%. AT&T is actually up 2% despite having that big sell-off, and they are still in the portfolio. I haven't made a decision to get rid of AT&T just yet. I'm still on the fence. Still want to see how that split up merger, whatever you want to call it, shakes out. Then it's followed by the Vanguard Total International Bond ETF, which is up about 1%. And then Dominion is down 0.1%. And Alibaba is down 14%, but I think Alibaba is a fantastic value. I do not mind one bit that Alibaba is down. I will continue to accumulate shares of Alibaba. I think they're going to be a phenomenal investment for the future. But let's go back up towards the top and let's look at how the portfolio performed over the last 30 days. Let's switch this to 1 month. We can see for the month, the portfolio is up $969 with a return of about 4%. So a decent return for 1 month on the portfolio. And let's look at the top gainers for the month. My number one gainer for the month was CRISPR Therapeutics, up 35%. Then the ARK K Fund. A lot of the ARK stocks did pretty good over the last several weeks or so. So the ARK K Fund is up 15% for me. Then it's followed by Illumina, Grow Generation, Microsoft, Tesla, Apple, and then there's Skyworks Solutions again, which I talked about earlier. Now let's take a look at my biggest losers for the month. The biggest loser for the month was Carnival Cruise Line. Seemed like the cruise lines and the airlines pulled back quite a bit, so that took down Carnival Cruise Line. And then my second biggest loser was JP Morgan. The banks had a pretty soft last couple of weeks, so this doesn't surprise me one bit. The JP Morgan being down 5%. Next one was LTC Properties. Looks like the real estate investment trust had a little bit of a pullback, so LTC was down 4%. Realty Income Corp, which is of course is another REIT, was down 4%. Then my Simon Property Group was down 3%. Healthpeak was down 2%. So a little bit of a soft couple of weeks for the real estate investment trust, which is not a big deal at all. I don't mind it when those things pull back because that means I get to accumulate more shares at a lower price, and that means my dividends in the future are going to get bigger. Then it's also followed by Goldman Sachs down 2%. Because as I said, the banks were a little bit soft. Then followed by Dominion down 2% and 3M down about 1.5%. So as you can see, like the portfolio just kind of ebbs and flows. 1 month, the technology will do well, and then the income or dividend paying stocks will pull back. So when those pull back, you get to accumulate those at a lower price. And then when they finally start going back up, they will be probably on the list for biggest gainers in the next month or two, but I will have accumulated those shares as they were pulling back. That means my dividends in the future are going to be larger, so it is a win-win. Now, let's get into some of the charts of some of these companies that I found pretty interesting and see if we can determine what could be coming in the future for those stocks. All right, well, before I get into some of the companies that I already own, I do have a question for you guys. I think that I want to add a little bit more diversification and a little bit more exposure to some industries that could do well if inflation continues to move higher. I don't know if I believe the Fed when they tell me that inflation is only going to be transitory, so I figure better safe than sorry. I might as well get some more inflation hedges in this portfolio, and besides, it wouldn't be that bad of an idea to be a little bit more diversified as far as those go. Anyway, I have no exposure to gold in the portfolio, and I do think if inflation does continue to move higher, gold should do well. I think gold's been kind of forgotten, and once money starts to flow back into gold, I do think that a lot of these gold miners are going to do well. And the one that I have it narrowed down to is Newmont Corporation, ticker symbol NEM. They pay about a 4 to 4.5% dividend, and they are of course one of the better miners out there. So I'm thinking about adding NEM, and I'm also thinking about adding MMP, which is Magellan Midstream Partners. They're in the oil and gas sector, and they pay about an 8% yield right now, give or take. So those are the two that I am looking to add. I wanted some more exposure to energy, so I think I'm going to add MMP, but I would love to hear your thoughts. If you have some better ideas down there, what I could add to my portfolio to hedge against inflation a little bit, please let me know. I am all ears. I definitely want some more protection against inflation in case it gets out of control. But let's get into some stocks that I already own. Let's get into my biggest gainer, which was CRISPR Therapeutics. We can see CRISPR had a nice run these last couple of weeks or so because of that great news that came out of Intellia. Intellia had some favorable results in their trials. And NTLA, let me see, I actually have this in my daughter's M1 Finance account, and I believe her average cost in her M1 Finance accounts is right around $14 a share, so she is up huge. And of course, CRISPR is in the same industry, so they were a beneficiary. And but the way this chart is looking, I wouldn't be a bit surprised if we have a pretty decent sized pullback in CRISPR Therapeutics. So I would not expect CRISPR to be on my biggest gainers for next month. I would expect probably some sideways, maybe to down movement in the next couple of weeks or so. Of course, if CRISPR is on my biggest gainer for next month, I will gladly welcome it, because I mean, if this thing continues to move sideways until this white line catches up, this 8-period exponential moving average, it wouldn't surprise me one bit if it has another explosion higher. I just wouldn't expect it after this decent run up so far, but you never know. I will definitely take it if they are on the list. Next one I want to talk about is Tesla. Tesla, of course, is breaking out of this triangle consolidation. It broke above that higher trend line and has been moving sideways. So if this thing can get a support bounce off of the 8-period exponential moving average, that white line, it wouldn't surprise me one bit if we get a substantial move higher in Tesla for the next 30 days. So it wouldn't surprise me one bit if Tesla is in my biggest gainer for next month. Next one I want to show you is the one I talked about earlier, which was Skyworks Solutions. The semiconductor stocks had a very strong last couple of weeks or so, and Skyworks Solutions is knocking on the door of an all-time high. So with how strong these stocks have been, it wouldn't surprise me one bit if we get an explosion through 200 or 205 on Skyworks Solutions, and Skyworks Solution being in my top 5 gainers for next month. That wouldn't surprise me at all the way this chart is looking, because this chart is very strong. Next one I want to go over is Snapchat. We can see Snapchat has broken out of this triangle consolidation, is continuing to move higher up. That 8-period exponential moving average is a very bullish pattern, so it wouldn't surprise me one bit if Snapchat was also in one of my top, or was also one of my top gainers for next month. Next one I want to show you is Apple. We can see Apple is moving much higher as well. Had a nice big bounce off of that 200-period simple moving average. So I think Apple is a little extended. I think that the stock market rally is starting to get a little narrow. We're starting to see a lot more money flowing into the bigger tech names. So that kind of tells me that these big tech names should continue to move higher. Now, these are still pretty extended. So even though if Apple does have a pullback for the next couple of weeks or so and does not get on my top 5 gainers for next month, it wouldn't alarm me at all, because these pullbacks are going to be natural after a decent move up. But it certainly looks like Apple is still in a very nice uptrend, and I'm very happy with my holding Apple, because it definitely looks like they're going to be higher in the near future. Now, let's get into some of the laggers. Now, the biggest sector that was lagging in my portfolio was the real estate sector. We can see the real estate sector had a decent pullback, at least in Realty Corporation. Had a pullback from about 71.50 all the way down to the upper 60s, which isn't that bad, but these aren't that big of movers. So a move down like that is definitely going to hurt it as far as its return in the portfolio, but that's not a big deal. I don't mind accumulating Realty Corp at these lower levels. Let's get into LTC. You can see LTC has been trending down for the last couple of months. I am not worried about LTC one bit. In fact, I'm glad to be accumulating this one at some lower levels. Next one I want to talk about is Simon Property Group. Simon Property Group actually has been a pleasant surprise in the portfolio. These people are known as the mall REIT, and a lot of people are seeing that malls are not as busy as they used to be, so a lot of people were expecting this one to underperform, but we can see from the pandemic lows, I mean, this thing has had a move up from $51 a share up to about $129 where it's sitting right now. I was accumulating heavily the entire way down, so I have made quite a bit on Simon Property Group, and I believe their yield, even though they did cut their dividend, I believe when I was accumulating it down here in the 50s and 60s, it was right around 8 or 9% on that yield. I mean, obviously the stock has gone up a lot since then, so the yield has come down. I believe right now it's maybe right around 4.5–5%. But most of these shares that I accumulated were pretty low, so I am doing pretty decently on Simon Property Group, accumulating at a pretty decent yield. Let's get into Peak, which was my other real estate investment trust. We can see this one has just pulled back a little bit, so I'm not too worried about Peak at all. And Peak, I believe, is returning right around a 5% yield, so it's a pretty decent yield for Peak Health Peak Properties. Next one I want to get into is the bankers. We saw the bankers had a decent pullback, but they have rebounded most of the way. At least Goldman Sachs has. Actually, let's look at JP Morgan. JP Morgan looks like it has rebounded. I noticed there was a lot of buying coming into the banks the last week or so. So it wouldn't surprise me one bit if it shakes off this pullback, gets back above that 50-period simple moving average, and starts moving towards a new high. Now, one stock that I have that has been pulling back that I am very happy to be accumulating is Alibaba. Alibaba is still continuing to grow at a very, very fast pace, and because of all of the the delisting news that is going on with some of these Chinese stocks, because the Chinese stocks are not wanting to adhere to our accounting standards, or at least there's a little bit of hesitancy to do so. I think eventually they will, but that is making these Chinese stocks being hit in the short term, and of course they are still growing super fast, so when you can pick up their stocks at a discounted price, it is always a good idea. So I am very happy to be accumulating Alibaba, and I think if Alibaba drops under $200 a share, I'm going to start accumulating them in my stock accounts as well. Right now I'm just accumulating it in my M1 finance account, But if we do get a move under 200, I'm probably going to start accumulating in my other accounts as well. Okay, everyone, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments on any of these stocks, or if you have any other ones you want me to take a look at, please leave it down there in the comments section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.